What's going on, guys? In this video I wanted to discuss rocket companies and basically look at the upside potential that I see in the stock. So as always, if you like the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit the subscribe button. So first, let's take a look at Rocket's chart. So here on the day they're up almost 0.5%, 5 days they're up almost 7%, on the month they're down almost 3%, 6 months down almost 25%, and then on the year down 18%. The biggest thing you'll kind of see on this chart is back in March they actually spiked up to almost $40, or actually up a little above $40, and this was on a really positive earnings report that we'll take a look at later. But as you can kind of see, they've just been falling off and falling and falling over the course of the last year, and a lot of that's come on the back of a lot of their earnings kind of being more disappointing after having a spectacular year last year in 2020 and then into 2021. So another stock you can look at that follows a very similar trend is UWMC. So they also are a mortgage provider, and you can see they kind of follow a similar trend. So up in the last 5 days. On the last month though, they're down a little bit, and in the last 6 months they're actually down almost 30%, so about 6%, 5 to 6% more than Rocket Mortgage. And then in the last year they're down almost 50%, so they've had a lot more significant decline. They aren't as big in terms of market cap, so market cap here on UWMC is 11.2 billion, while Rocket is almost 3 times the size with 32 billion. So they've both suffered a lot, and that's just has to do with the mortgage and all the interest rates being driven down last year, and now fears of interest rates being increased, and that thus causing both these stocks to fall. So Rocket Mortgage is actually a company basically within Rocket companies, and Rocket Mortgage is just one basically specific branch of that company, and this kind of lays out all the branches of Rocket companies. So you have the home financing, which is obviously Rocket Mortgage, and that's just basically taking care of loans, originating loans, and basically matching clients with basically a loan that fits their kind of needs. And then you have home search and sales, which is kind of just making sure integrating and helping basically home buyers find the homes that they're looking for. And then auto purchases, so that's their auto finance, which is kind of relatively new. So that's financing loans for new cars or used cars in a lot of instances. And then you have personal financing, which is business loans and other kind of unsecured loans. And then an interesting kind of development is client services. So you can kind of read there, that's sales and support organization for Rocket and third-party organizations that make interactions between brands and consumers more effective. So this is kind of an interesting addition to the business that doesn't really have a ton going on. Well, it has a lot going on, sorry, in the background, but as of right now it's kind of behind the scenes work, and they're kind of building out that experience. So their main focus and kind of the backbone of all their companies is the home, and recently they've got into the auto loans. So that kind of explains what the business takes care of and what their main kind of target is. So with that said, obviously with interest rates dropping in 2020 with the pandemic and everything that occurred, we saw a high demand for basically people refinancing their homes. And obviously that had a really big effect on Rocket Mortgage and that branch of basically Rocket companies. So they had basically a lot of sales and a lot of people, new customers coming into the business. And you can kind of see that looking at their previous financials. So in December of last year, of 2020, their revenue was up year over year 142%, which obviously is just insane. And then March, it was up 230% year over year. So kind of even going into 2021, as interest rates stayed low, people were looking at basically refinancing their homes and making sure they got in. I've heard of people basically being put on backlogs for a number of months until a lot of these mortgage companies could get people in and basically get them the mortgages that they were looking for. So really you had a lot of basically dynamic movement in the mortgage industry, and a lot of people coming in and looking for refinancing and financing just in general because of how cheap money was. So what they've seen though in the last couple quarters is a huge fall off. So you're down 50% year over year in June on revenue, and then the more recent earnings you're down about 31%. So not nearly as bad there, but that is also over the summer months, which tend to be your best months for getting mortgages. So overall you can kind of see that earnings have dropped off quite a bit, and that's kind of to be expected from the more concerns of interest rates and a lot of people having basically already refinanced their mortgages to really the lowest rates that we might see for a while. So with that, it's good to look at their balance sheet and kind of see where things are at. So this is 2020. In a couple weeks or in maybe the next month, we should get the final results for 2021. But as of 2020, we saw that their total assets, you can see we're sitting around 37.5 billion, while their total liabilities were around 29.6 billion. So that in turn kind of, you expect a company like this where they are providing mortgages and providing loans to have a higher basically ratio here, where they have more liabilities basically on their books. But at the end of the day, with them having more assets than liabilities, that's still a good situation and shows kind of relative stability in the company. So what interests me the most about rocket companies is basically the PE ratio and looking at it kind of over time and where we're sitting at. So what we're seeing right now is the trailing PE ratio is obviously sitting relatively low because you're looking at the trailing 12 months and seeing where the price is compared to how much the company's earned. So over the last 12 months, as we discussed, all these people refinanced their homes. They took on new mortgages. Rocket benefited quite a bit from all that refinancing, and obviously they had really good earnings. So what you're seeing is basically their trailing PE ratio is relatively low, especially compared to how it was in the past. So Rocket is a relatively new IPO company. So you kind of see that when it originally IPO'd, as kind of a lot of those stocks do, it ran up quite a bit, but it's still kind of figuring out where its PE ratio should sit, right? So we saw it run down, and with all the, like I said, with all the earnings and increase there, we're actually sitting at a trailing PE of less than 5. But more importantly, we're looking at the forward PE, we're at about 11.21. And over time, we've kind of seen that in the past, the forward PE ratio was actually even lower. And again, a lot of that has to do with how well kind of earnings went over 2020. So really the question is, right, as Rocket comes to kind of find its footing in the market, where does that PE ratio settle out? So what we look at over here is basically some possibilities of where the stock could go. So what we've done is we've done used that, let me switch this over, RKT, and we've looked, and we have the forward PE ratio here that was just on that Yahoo Finance page of 11.21, and basically we have some speculation. So we have speculation 1, speculation 2, and speculation 3. So where do we think the market is going to price Rocket Mortgage? Right now it's pricing it that for every so the price to earnings, right, you have $11.21 for every $1 that the company earns. That's basically what this number is saying. So really over a 10-year or 11-year period, right, you would see the price completely pay back, right? So you would see the overall stock would pay back and return your full initial investment. So you can kind of extrapolate that over all these, but on average, right, the stock market kind of trends around a 20 PE ratio. So mortgages are cyclical in nature, but also relatively stable. So I wouldn't be surprised if the market kind of finds its footing for Rocket Mortgage somewhere around a 15 to 20. But if Rocket Mortgage can innovate and kind of expand their business, I also wouldn't be surprised if they can get up to 25, even up to a 30, depending on what level of innovation basically they can achieve on financing and other things that they expand their business into. So here, if we take a quick look, like I said, these two I would say are most likely. So we could see right now we're seeing a correction hard to the downside. So we're seeing a very low forward PE ratio. So if we see a correction basically to the upside, I think we could see a 20 or 25. But on average, I think the stock will kind of range in the 15 to 20 kind of range. So from its current price right now, basically we could see the stock go up to 21, almost $22 if it were to sit at a forward PE ratio of 15, and if it were to sit at a forward PE ratio of 20, we would actually see the stock go to $29.22. So from the current price, that represents for this lower option a almost 34% return, and for this kind of second option of sitting around a 20 PE ratio, you would actually see a 78% return from its current price. So here's the more kind of speculative jump, and this one I wouldn't expect to see anytime soon, especially with interest rates going up. But here you're seeing that the price target, if the forward PE ratio were to sit at a 25, would be $36.53. So that would be a 123% gain. So overall, you kind of can see three different scenarios here of where the price could go. Again, a very, what I would say, conservative estimate of PE ratio of 15, or somewhere kind of in the middle where the market kind of evens out. That would be a PE ratio of 20, and then a more speculative that Rocket can kind of innovate and kind of keep things moving forward, and that would be a PE ratio of 25. So here's one little side bit that I came across when I was researching the stock, and it's very interesting the kind of things that you're seeing in here. So this is institutions that own Rocket company. So what you can see is basically how they've changed their shares, and this was updated as of basically the end of September here. So what you can see is some of these have obviously decreased their shares as the stock has fallen. The ones that stand out the most to me and that I like to look at and have a lot of respect for is Vanguard and BlackRock. So Vanguard has a lot of index funds. So what I would expect is obviously as they've kind of as Rocket's pulled back, they've liquidated some of their shares, sold some of their shares, basically just in the rebalancing of their index funds. But what's more interesting and more bullish is what BlackRock is doing. So BlackRock clearly has at least a lot of faith kind of in the company, because here you can see they've bought almost 1.2 million shares in Rocket companies. So that's kind of a huge number in there, and shows kind of a very bullish sign that they think the company is undervalued. So if we look at this, right, this was dated, like I said, sometime in September. We can go back and look at this chart, and September, you can see that was actually at a 17 kind of dollar mark, and you can even see the stock dropped before that. So basically, BlackRock, which is a huge fund, they were purchasing kind of somewhere in this zone, and we're actually lower than that. So really the question, and it'll be interesting to look at this in the future, is how many more shares have they bought? Were they happy with kind of where they're sitting at? Where are they looking at, and where's their kind of price target for the stock? So the last thing I wanted to look at here, and I always like to look at, is where is the price target for the stock? So there's a number of analysts. You can see that there's quite a few that are following this stock. A lot of them are kind of sitting in the hold range, so not very bullish, but also not telling people to basically sell the stock. And here we have kind of the range for the stock price targets from those analysts. So the high is 23, the median is 18.50, and then the low is $14. So actually below where its current price is. So that comes out, and the average is about 18.36. So you could see that there's at least bullish overall in their stock price targets. The real question is basically, right, BlackRock was purchasing, it looks like, around $17. So there's not a whole lot of upside compared to where they were purchasing. So I'd really be interested to see where they see the stock going and kind of what their overall analysis of the stock is. But even when you look at this $18.36, if we jump back over here to the spreadsheet, you can see that even that has a positive upside. So you're looking at a 12% return. So realistically, a lot of analysts aren't looking out a ton super far into the future. So even a 12% return, that's greater than what the market normally returns, especially on a stock that's basically been beaten down. And it's good to kind of focus on stocks that have been beaten down, like a lot of the small caps have recently, and basically purchase into the weakness there. And then when they kind of recover, then you can make a quick maybe 12%, maybe 30%, kind of somewhere in there where you're in a good shape and you're also only holding the stock for a very short amount of time. So overall, I like Rocket. I think it's a very stable business model. So I think in the long term, you're not going to lose with Rocket, right? We're looking at numbers based off kind of present numbers. I think in the future, they're going to have a lot of growth. One thing I didn't really mention in there is, right, in 2020, a lot of people got introduced to the idea of going online and getting mortgages. So I think that's kind of a new frontier. A lot of people are going to kind of start venturing down that path instead of kind of the old fashioned of going into a bank or going kind of somewhere local. I think online will turn out to be easier, more efficient, and I think Rocket's kind of going to capitalize on that movement. So overall, I hope you enjoyed the video. Let me know your comments and how you feel about Rocket Mortgage, or Rocket Companies. If you're interested in purchasing it, if you think it's kind of a stay away, keep your eye on. I'd love to hear your opinion on it. And again, if you like the video, make sure you drop a like down below. If you want to see more videos like this one, make sure you hit the subscribe button. And I hope you have a wonderful rest of your day.